Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab? Marty must be missing. How we doing in Discord, guys? And YouTube? Can I get a check? Well, Marty, where you been? Thank you, Marty. How we doing in YouTube? We doing all right, everybody? Okay, great. Thanks, Eduardo. And JRB, thank you. Well, everyone, thanks for visiting the Trader Lab today. I'm your host, Tom B. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's about understanding market mechanics, how the market works, why it does what it does, and how at times you can get in alignment with it. This is about the business of trading. If you're interested in the business side of trading, understanding what this is really all about, it might be different than what you imagine it to be, because when we come into this business, really all we have is a fantasy. And there's quite a difference, as you guys know, between fantasy and reality. So the idea of Trader Lab, and the reason I agreed to do it, is I've gone down the same paths you have, except I started in 1980. So I spent more time digging through everything, trying to find what worked, and everything works sometimes. So it becomes quite burdensome uh, to have random winnings with any process, whether it actually has an edge or not, and then to try to sort out what really is just noise. And even though you have winning trades over time, you're still making a donation to the Floor Traders Retirement Fund. So I had to spend a lot of years, and I've sorted out, at least for me, an understanding of this business and also how to at times get in alignment with structured trades. And you can learn that in the Trader Lab. And it doesn't mean, of course, you'll be able to create a career, but I suspect, and at least my personal opinion is, anyone can learn how to trade, but not everyone can trade. And that's psychological impediments. And those are probably going to be the greatest obstacle, assuming you actually do the work to create a statistical edge. And again, past performance is never indicative, as you know, of future results. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures. Hold on. Okay. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's get into it. Now, I'm going to start out like I typically do. I'm going to talk about context and the higher time frame. This is really important. This is yesterday's RTH. So we had a consolidation. Day before yesterday, we broke out of it, and we had wicks on both sides. And if you guys remember, I was working the short side, and then we had the squeeze, and then going into the close, that's this day, and then it got smacked down. That gave me a leaning to the short side for yesterday. Now, I posted, and if you guys followed the stream, I said there's a few possibilities. Of course, there's always possibilities, and we don't know the answer. We only know the possibilities. And I'm going to suggest in trading, it's not a prediction business. It's a maybe business. Maybe it'll do this, maybe it'll do that, and it's not up to us. We're not in the business of predicting. We're really in the business of alignment. So what do we know here? There's buy stops above these highs. There's sell stops under here, and this is a consolidation. So there's buy stops up here, sell stops under here, and this is our target, 57.31 quarter, and it's not a recommendation. So when I came in today, based on the ETH, there are two things I know. One is shorts primarily, because I want to align with the higher time frame trend. So my initial trading was shorts, and it still is my primary orientation is shorts, even today, even if the market goes up. I will take longs, but I also take shorts. Isn't that sound very conflicted? Well, as I always post in the Trader Lab, and I post quite frequently in Trader Lab, you have to know which side you're going to trade from. If you're a developing trader, you might want to trade from a dominant side, which is sellers, and you can also trade both sides if you're an intraday rotational trader. That is all time frame specific. Now, these are important levels. 57, I think it's 31. Hard to see it. Yeah, 57.31. This low, 57.44, because the sell stops. Now, we are in a turbulent environment, obviously, because of fundamental inputs, tariff news, all this is fluid. And as news hits the market, it's going to take whatever side is offside and squeeze them. So you always have to use good risk management. And it's not just because of what's the current environment. It's every day in this market. You're at risk. You have to manage your risk. You cannot be passive. I've traded through 911, the 87 market crash, Desert Storm, peso crisis, Hunt Brothers curbing the silver market, all kinds of stuff. And a lot of things come out of left field. So that's why when I hear traders who don't understand or respect risk, they're just waiting to become a statistic. You always have to protect yourself in this business. Let me make some adjustments here on my Bookmap, and I'll be right with you guys. Then we'll get into real time. And remember, these streams are available to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, and the rest. Now, let's go take a look, and I'll tell you why I was looking at shorts. Now, this is pre-RTH open, okay? So this is the micro composite volume point of control. Let me take you right back to higher time frame. And I get a lot of requests for this. This, in these 2 days, if you draw what's called a volume profile, this is a composite profile, just the terminology, it's because you're putting overlapping days together. Overlapping days are called balance. Sellers are here, buyers are there. That's why it's sloshing both sides, okay? Equal opportunity to get abused. So here's what we know. Right now, 31-ish is an outside edge. This is a distribution. This. So that's the high volume or retail price up here. We fell out of it, and now this is the fair area, and this is an outside edge. So I know potentially this is resistance, and if I can come up in here or not. So for me, I'm looking to be selling to come back to 90. Why is this important? Because this is where the highest volume is. And the way the auction works, it's what's too high, what's too low. That's one part. The other part is if most of the volume is happening down here, the market tends to return to it. That's called mean reversion. So for me today, it's only, well, not only, but primarily been the shorts for positions and then rotational trading subject to my plan, which is not important about my plan. What's important is about developing traders understanding market mechanics. 57.90 is the highest volume. So why is volume important? Because trading is shopping. And the market's job, let's go back to the fundamental reason the volume profile and price and volume might be material for a trader. It's because it's the true representation of valuation. And the reason we have a market is to find out what is unfair, what's too high, wherever that might be, and then what's too low, wherever that might be, and then come back to the retail price, volume. Now, the other piece in all this is, while we're doing this rotation, we're building up energy. It is a consolidation. And at some point, if this becomes too high, we can come down to the next naked volume point of control at 57.31. This is a previous retail price that was too low. Well, if we find what might be too high, which is yesterday's naked volume point of control, and the ETH high, is it reasonable to think if the auction comes up here and goes, nah, that's too high, that we can come back here? And is it also reasonable that if we come outside, we can come back here and do this? And is it also reasonable if we get traction and we take these guys out because they're sell stops, we can get here? That's, if you will, the nexus of the plan for today. And I hope you're getting something out of this. I have to try to focus on different things. Now, RTH open. Based on what we know, what do we have? 90. We have the ETH mid above us, and these are all probable targets. We have settlement. We have the naked volume point of control, and I think, let me make sure here, where's that ETH high? Whoop, I just saw it. I want to point this out to you because before the market opens, all of this is material and is part of my trade plan to try to see myself the possibilities. This was the retail price yesterday. Let's look a little bit closer at it. The ETH high tested that price. I'm not paying that, maybe. So if that's too high, then what do I want to do? I want to be trading back towards retail and or longs. It doesn't matter. I trade, doesn't matter, right? It's all a matter of understanding market mechanics. So if I push outside, and of course this is always possible, settlement, come back here, why not? And then if not, I'm coming back to 90. If I get below 90, then the possibility is to take out yesterday's low and continue on the, our merry way. The other possibility is to stay inside yesterday's range, but it's unlikely because we can sit inside and compress some more. Remember, balance leads to imbalance. So I'm looking for this for today or maybe never, and it could just as well come out the top. Now let's go to the first trades. So for me, I want to be short. And all this is posted in TraderLab quite a bit, charts and a lot of other trader participation, which is what makes the TraderLab unique. It's traders helping traders. We are leveraging our collective experience. So let's go take a look. So what I know is this is too high and potentially up above us might be too high at the open. So this is called VPOC migration. And what this does, it sets up the first trade. Now I have over 90% probability of taking out the ETH low, which is this. So for me, I'm looking for shorts because that's pretty close. And maybe I'll get, quote, lucky and we'll just take out yesterday's low. So for me, when I put this trade on, initially, I'm looking to get these guys out and to go down to that target down below, which may happen, may never happen. That's not for me to know. So this is what I call a variable high volume node. And I label them. And what I'm going to do here and what I do is I mark the high volume because if we think the market might be an auction, in other words, they're trying, why do we even have this market? Try to figure out what's too high, what's too low, what's going on. So that's what gives us the rotations. So I'm using the auction as an attempt, underline, to recognize behavior that I have vetted and then, as they say, act accordingly. So this is too high right here. This is the new retail price. It shifts down. Let's just follow it. It shifts down here. So what this is telling me, let's look at the language of the market. I don't use indicators. I just read the market. So this is retail. If I break below it, it is saying now maybe this is too high. There's my sellers, okay? So for me, this is a short. And then I'm going for yesterday's low. We come back here. This is now resistance. Let's look at it. I'm going to draw another variable high volume node. I'm not going to draw all of them because of time constraints here in stream. Because I do need, as you know, to get back to trading. So too high. So the market comes down, I'm short, and I think, well, what I think doesn't matter. What I'm looking for is the possibility to take these weak guys out. This is my target. Okay, that's the 30-ish, wherever it is. Let me just come back so you know where these levels come from. Here, okay? So I'm going for the stops under here, tons of stops here, tons of stops there. This is the shootout between the buyers and the sellers. Downtrend, which keeps me leaning more short than long, though I trade both sides going to here. This is where the numbers are coming from. If you have questions, please post them. So right here, I know this is resistance. So what I do is I just manage my trades. You know, if I get taken out of the trade, I get taken out. I don't think too much about it. And I do. I get taken out of all my trades at some point unless they hit the target first. So I just trail. I get taken out. That's that. Now what? Well, overnight low is here, and then I'm looking to see how far back do we come. If we cross this, and especially this, which is resistance, then we're going to squeeze out the shorts. And I did post this morning that the ETH was also short. And I think I posted some shorts from the ETH, I think. Can't remember. It seems a long time ago. I start around 6 a.m. or so. So I've been trading typically a few hours before RTH. So if we come across here and we rebalance the shorts in the ETH and the early selling, and this is part of TraderLab, the opens in the TraderLab, we have to anticipate always what might happen, not what will happen, because we don't know. But we do know what might happen. So if we come across, then the short is over. Whoops, that's not what I wanted to do. Let me come back. Sorry, guys. We'll get into these other. There's structured trades here I'm going to show you. Let me try to get back to where we were. And then I'll get into real time, okay? Where was it? This was a short right here, down to there, by the way. I narrated that in TraderLab, or at least mentioned it. I don't. Yeah. Sorry, trying to get back here. Now, I'm not going to be talking about the trades I take. That's not material. I do post them at times in TraderLab as part of education so traders can observe behavior. I don't call trades. I always think, you know, what I do is I'm just one person, and what I do is just, suits my style of trading. So this sets up, now I'm looking to trade outside in. Now this is a trade I took. It's not a structured trade. Okay. So basically this back to here, it's called mean reversion. And I posted in TraderLab, I'll be trading mean reversion today, favoring the short side. So this is what I know. This is the opening swing high. What's at the opening swing high? Stops. The sellers in this leg, if we don't just fall out, which, who knows, if I get a reversal, then I'm going to anticipate a squeeze. If I squeeze out the shorts at the opening swing high and get a selling structure, that suggests to me this. This is called mean reversion, and that's what this is. Outside it. Now, I have no clue about this, but when I come out here, I have a structured trade for me, and it's the opening swing pick. And of course, this could just keep going, right? Because we know that the ETH is out of balance in the sense it's short. So these kinds of trades, you might not want to take it, but you have to vet it. Nothing is mechanical. It is fractal or time frame oriented. So I took a short here back to here. Then the objective is to come back out here. Now, where's support? There. So let's look at this. This is the fair price, and then it's looking outside for what's unfair. This is called a low volume node. This might be unfair. And so if we come out here and in this outside edge, we can then rotate back up here and just do this. Or if we take this out north, if we fall under here, we can come here. It's sequential. Where's the stops? We have some stops here. right under the low volume node. We got stops under here. So I got target there, target here. Let's see what it does. Watch. See what it does? So for me, it was just here to here, outside. It's a rotational trade. It's a plan within a plan. Okay, so that was my thing. So I took that. That was a short. Now here, I did not get long. Okay, me. Not saying that's good or bad. It's just, my trade is just, I just wait for my trades. It doesn't matter to me. Now remember, 90 is an important level. So if I clear 90, then I know I have upside potential. Let's look at 90. Where's 90? The fair price. Let's come back to 90 here. So if I come outside and I don't get this, and then I come around and I cross this, what does it suggest? Somewhere outside. Don't know where. This is my resistance. Posted in TraderLab. Now, what do I do with this? Well, I got a couple possibilities. One moment, please. This, by the way, is a target on the way up. I did not take this to get long, okay? But statistically, this has a high probability. The settlement, overnight mid has a high probability. Settlement, right? And whatever, and this. So these have high probabilities. And so I know that if I'm on the short side, and I could trade either side, that I have to be conscious of this versus being unconscious. So right here, now this is going up in time frame or fractal. Let's come back here. I want to show you something before the market gets up here. So if I was long, I would be targeting this because it's my resistance, and this has a high probability. These are targets if I was long. No long, no target. So I now know that I'm statistically leaning towards the north side. So now this is, let's just say, not a structured trade. It could be, but it's higher time frame or fractal oriented. And that means more volatility and more chance to get stopped out. So for some traders, this might be a long on a test. Other traders are not going to do anything. It's all a function of time frame and fractal. Let's look where we come. Where's the support? It's here, against there, and against an outside edge. If we come under here, we can rip down here. There's not much going on here because we accelerated and it's poorly auctioned. We have to remember this. I'm going to make a little note here in the side, right under these swings is an outside edge called a low volume node. And what is a low volume node? All it is an edge of a rotation. Here's what we have to remember. Outside edge, sell stops are going to be here. So you got to be aware of that. 9:30, we have the IB stat, which is the first hour's high or low. There's over a 90% probability we take out either the first hour's high or low. So now it's longs. And the other side of this is that if we take out the first hour's high, there's approximately a 30% probability we take out both the first hour high and low. Could be a little less, 29, 28. You have to bet these for yourself. So I know at the moment, even though I am leaning to the short side, that maybe we're only going to squeeze a bit and then come back in to balance and just rotate. And we have about a 30% probability-ish of falling out the low of the day and going on to the target below. So what do I do about that? Well, I turn the card around and now I'm aligned on the long side, looking to get short again. Seems kind of crazy probably, but it doesn't matter because it's not right or wrong. The market can go and take out yesterday's high and go to the moon, but it has nothing to do with my trade plan. It has to do with my alignment in the rotation. When I say me, I'm saying you because you'll figure that out. That's what a trade plan is about. And you have to do research in order to figure these things out. So this is a long, it is a going for a statistical probability that happens at 9:30 Central Time. So when this happened, and I had this test, this is along here or this right here, because I have now this volume and this location and this outside edge to lean on with over a 90% probability. Does that make sense? I hope it makes sense. Oh, I see I'm getting my downside. I wasn't even aware of it. How about that? I'll have to show you the short. I think I narrated that in Trader Lab, but I can't remember. I got to find stuff on my charts. They all disappeared. Wasn't even aware. 57? Really? Oh, I have to show you the short. Okay, so the goal of this long is this, and then we have the ETH mid has a high probability, and 3031 is that low volume area. Let me bring you back. This, which for me is the outside edge. So I'm basically doing this in the way I operate. I'm not myopic. Put it this way. I try not to be myopic and get caught up in the noise. I'll trade the rotations, but I cannot forget what I'm attempting to do. That is, if I come up here and I exhaust, I'm going to fade it to come back to 90 because that's the mean. So in an intermediate time frame, it's this to this, it's out there to there, and the goal is to come out the bottom, which who knows. I'm going to show you a couple more structured trades. I share 60 PDFs of these trades, and that's to help traders build something. So what do we know? We have another structured trade. We have two structured trades here in TraderLab. This is called VPOC migration, so this is a first piece. This suggests that what's below us here is too low. Going to label it, and it will become a target potentially if we come back to it because it's too low. And what is the trading? It's a shopping experience. I get VPOC migration, 98-ish, and this can become a target if we reverse. So what I'm doing is this is the high volume, and the market is a shopping experience. Now remember, we left this. This is vulnerable to get filled in. It was created by that. Okay, so this right here is a structured trade. This VPOC migration, and there is support here and here for continuation long. Okay, now this becomes, and there's the next target. And as far as I know, we're going, wherever. Now, VPOC migration, and I posted this in TraderLab, and you guys can visit TraderLab. You'll see all this stuff. It's all in there. And I don't call trades what I do because it's not what I do. I mean, everybody finds their groove. It's what the market does and helping traders recognize potential behavior. And then the trader, the individual trader determines, am I trading to the moon or am I going to be looking at this kind of structure? This is a 20-point rotation. Can you do something with 20 points? I can. That's kind of where I like to operate because of the risk reward. I'm not a scalper. That's fantasy. I've been a high volume trader. It takes a lot out of you, and it's very easy for fatigue and myopia to come in, and you kind of lose, they say, the forest for the trees. This is too high. Now, I don't know it's too high here. There's two possibilities. This, notice here, migration up. Notice here, migration down. What does this say? Potentially too high. Now, let's look at the behavior. Now, I don't know. Remember, no clue. This is the auction. What does the yellow line say? Here, it's too low. Here, I get rejection. Think of this like shopping. This is too high. Now, this becomes support. This becomes resistance. I am selling these things to come back in. Just saying. So, outside, back to here, 90. And if I get below 90, then I have something else. Let's see what it does. And my outside edge, my low volume zone, is in here. So my stops are here, there, there, and support. Whoops. Look at that. Oh, I do. Oh, let's go to real time, I guess, huh? I had no idea how this short was going to work out, of course. Beauty. What do you guys think? And the target down here at this point is this. So this trade is from too high to too low. This is a Trader Lab structured trade. What do you guys think? Is this useful? So what are we talking about? Short, scale, stop stays above here. This is your scale. We anticipate VWAP and mid buyers, which is fine. They get paid too. Their resistance is this. So these shorts are here, here. All these are Trader Lab scales here. Okay? And then here. And you could be done with the trade, or you're holding one more for the targets below, yesterday's low, and this. Remember, 31 is our primary target. Now, if you have questions, and I apologize if this is overwhelming or too much information, I'm trying to give you a sense of what you can learn in the Trader Lab. JRB, it's more volatile because of tariff and news inputs driving the behavior. And global markets are destabilized by this. So, and it can change any moment, but that's where trade plan comes in. So I was short in the morning, then turned around and got long, then turned around and stayed short because my primary trade is the short side. And this is where it's kind of an interesting dilemma for traders is what time frame or fractals are you trading? All that has to be sorted out before you put the first trade on. Otherwise, you're just gambling, and that's okay. But I always say go to casino, get the cocktails and the ticket to the buffet. So anyway, this is the next target down here. Let me go back to the higher time frame. I hope this is all making sense. This is where we're trying to go. And remember, there's a lot of fuel here. Now, I can't drag. This is Investor RT. It is my higher time frame chart. It also exports levels to Bookmap, which is really neat and really, keeping track of the auction pretty much tells us what might happen and where it's about participant behavior. The market is based on what the auction and the participant behavior. It's not based on our indicators, which basically follow derivative of price in some fashion. Well, price is only a very limited part of the picture. That's why I don't use indicators. I force myself to throw away what didn't work for me. And it's not that indicators won't work. It's that most retail traders prioritize indicators when the priority, in my opinion, should be actually how the market works. Then if you use an indicator or some measurement of some kind, if you understand why this would be a short, then if you have an indicator floating along, then you might deploy it for help you with triggering. But if you're just looking at stuff like this or any little rotation, You're not going to sustain yourself, in my opinion. If that's happening to you, you should use the link in the bottom of YouTube. You don't have to keep doing that, unless, of course, it isn't the random trades, guys. Look at the stops coming out: 1,000, 1,200, and where are they coming from? Yesterday's low. And then you see, so isn't this logical to you? So we're going for this and maybe lower. I can't show you a higher time frame. It's on a different computer than this. This is only for streaming, but I think you get the idea. How about some questions, guys? Are you getting something out of this? How are we doing in YouTube? How about a like? Give a thumb up if you're finding this useful. You're learning something from the stream. Um, I'm only going to continue doing these streams if um, traders are benefiting from it. This is a short that's right out of, structured trading. So I'm not on that one because I'm here with you. So it's always a conflict for me to give up this kind of trade. So this is what I trade for. Um, I mean, I trade anything, basically, but I'm not looking for these little things. I'm looking to go to there for my scale, and then to here, and then one for the ditch, as a good friend used to say, or the Hail Mary pass, the runner, which is sort of the lottery ticket. Yeah, Chronos Master, hi. Thanks for posting that. Yeah, if you go up to the pinned content, there's a document section. You'll find there statistics that we use in the lab. You're going to find a library of webinars. Um, there's vocabulary, there's the acronyms. It's all posted up there. I also did a 3-part series on trade plan. There's example of trade plans. There's examples of structured trades. There's a ton of information there. And there's, of course, a library of webinars that covers a lot of different topics and market conditions. One thing you'll see, and if you've been in the Trader Lab 2 weeks, roll your sleeves up, because this is different probably than what you've come across in your travels. And it's going to require you to roll your sleeves up and invest time. Unfortunately, in trading, it is the education to become a competitive, proficient trader takes a lot of screen time and intentional practice. The idea of this is that trade plans are prepared outside of market hours. And even if you have one structured trade that has an edge, that's all you need. Because once you have one, you've created a template, and then you can add more and more and more. Notice what we have here: 2,000, 2,500 buy icebergs, 1,700 sell stops. Thanks for playing. Notice how the icebergs are active. So right here, what we're looking at is counter rotation. So in your trade plan, and I'm speaking to everyone, you have to know what you will do before it happens. If you have to question what to do, you don't have a trade plan. You're making it up as you go. And again, I'm not speaking to any individual. I'm saying, this is for all of us. Because what happens to us, we go, what should I do? Should I get out? Should I get long? I see these stops. I see these icebergs. What should I do? How about this? The question is already answered before you put the trade on, because we're in an environment that's 100% random. And what's random about it is the rotations. Why is there a rotation here? What about this one? Should we get out here? Should we get out on this rotation? Or should we be out on this rotation? Is this rotation different than the other ones? Is it? What do you think? Is this rotation different than these rotations? Would this not be a long? Might it be a cover? And we still have a target open. What would you do? Well, let's see what the market says. Now, for me, and I'm not saying this is a good plan, it's just one, and it doesn't matter. I may have a target here, and I know why it exists, and I know how the market behaves. Doesn't mean it'll behave in this particular rotation or this moment or any time at all. What it means is this is open and probable. And I don't have a statistic for it, but I do understand why the market was coming back here. And I do understand why this is too high, because that's our retail price and the shoppers left the store shopping. So if this was too high in a fractal, and this is the retail price in the next higher time frame, I can anticipate coming here. If I get under this, then I'm coming back here, and then I have the potential to come there. So I have choices. I can manage my trade out here at this high volume node, which was at one point too low. And there's this old concept I know you've learned called support and resistance. If I get below this, just want to show you some structure, which is this high volume node right here, then that's too high. Too high? Test. I'm not paying that. Too high? Next target? Too high? Break? Then what? High volume node, outside edge, this. Where to? Potentially here. That's how I trade this. So the last trade for me, if I wasn't with you, is this. And the rest of this is just following the yellow brick road. I'm not suggesting anybody trade like this, but I find that if I'm taking approximately a 3-point or less risk on a trade, I have found for me, I don't want to trade, well, like a whirling dervish. I want to get paid. So this is what I do. And this is definitely not a recommendation. What I don't talk about here in the stream is all the other trades I'm taking on the rotations. And that's only because I've been doing this 45 years. It's not because anything else. I've been doing it this long, and I taught myself a language. And when you come to Trader Lab, really, the idea is to not rely on Google Translate, a compilation of a mix of spaghetti and indicators in multiple time frames. You don't need it. To get as close to the market in real time as possible is order flow and market mechanics in the auction. If you can put those pieces together, this is a language. So when I'm looking at this, what is happening here? Well, I got buy stops, which is the delta, the green bubbles. But does a green bubble tell you to get long? No. What it tells me is I've got buyers, and there's a passive side, and there's the icebergs taking the other side of the buyers. Buy stops go off. Who's taking the other side? These guys. If that's buy stops and not initiators, which you don't know with Delta, and I see my sellers take control, and I get VPOC migration, then two things are going to happen. I'm going to break here, just like there, or I'm going to push off. If I push off, then I have to look here where the absorption was. The sellers took control here. That's what I know right there. Now, when I come in, this is the opposite behavior. This is micro high volume, right? There, this is high volume here. The market goes, is that too high? Well, no, this is too low. This is a higher time frame than that. This is a shorter term fractal. This is for the developing daily time frame. Then I come back and I check it here. Why is this important? The sellers took control here. So I know I got sellers there. And if I put a trade on here where the sellers took control, I can put this trade on here and a stop 3 ticks above this high. That's And I only share that concept so developing traders can make this somewhat structured and mechanical. Let me show you just an idea on how you might, assuming I get this to work, let me try this again. I'm going to show you a structure for a trigger, hopefully. There it is. So take a look at this, see what you think. So here is where, actually it's a little bit higher. It's right, but it's pretty close. Right there is the outside edge, because that's where the sellers took control and these buyers are underwater, you know. So there's my trigger. Now this is a buy. So I have support and I have resistance. So I know if I get long here, I got to clear this thing. That's what I know. Now I don't know what's going to happen. That's the other part I know. So I know a couple of things: too low, too high. Now, if I want to fade this, I'm going to be selling it either here or I get the VPOC migration. This is an actual structured trade. Other things one can do are based on order flow read. But let's say you're still developing. There's support. There's your resistance. Your stop would be here. If you waited for this, the rejection, you're selling that with a stop over here. Okay? So you could sell it there. You could sell it there. You could, and you could take your stop there with everybody else, or it breaks again. So look what you got. Sellers, remember support, buyers, absorption. Why don't we go up here? The passive side is selling here. There they are again, the aggressors. Come back to the volume after VPOC migration. There they are again. You notice some selling perhaps? Where's my resistance? It's that one. Short to here, to there, and we're holding theoretically for this. And that's all in the trade plan posted this morning in Trader Lab. Hope you guys are getting something out of this. Yeah, Chronomaster, welcome to Trader Lab, by the way. And if anybody wants to come to Trader Lab, there's no cost for this. There's a link in the bottom of YouTube. There's no cost. It's a community of like-minded traders who come together to leverage their collective experience. It takes a lot of work because there's data mining and traders contribute. In other words, I've shared the things I've gleaned over 45 years. A lot of us somehow think, oh, well, we're going to hold our cards close to the vest like we have the magic. There is no magic in this business. Everything is out there in the public space. The problem for retail traders is you spend your life mixing and matching, and you have an infinite possibilities of multiple time frames, multiple indicators. And you can spend, if you think of it exponentially, you don't have enough time in your life to go through all of them and somehow cobble together an edge. But you'll always have winning trades because gamblers have winning hands. But the casinos only play games with an edge. And if you want to think about it, we're in a gaming business of only interacting when we have a statistical edge. Well, how do you get that? Well, that's what the Trader Lab's built on, helping traders understand the business they're in, not the fantasy. So anyway, this is our target. So I was starting to say, let's say this target is still open and I see a counter rotation. And this is not a recommendation. I'll keep taking shorts or adding and scaling, but that's more advanced towards this. And if I get below it, I have other targets. But it doesn't matter, So when you get a rotation like this, which is what I'm trading for, I don't need a lot more. It makes my day. And, 45. This is almost a 60-point move. And I trade multiple contracts. So I'm just going to say to you, this is what I trade for, but you could be doing this to this, pull back to here, short to there, target, right? Break here. We come back here. We're going to look out here and we're going to look out here. If it comes out here, possibly, so it's there. If I get past these stops, other than squeezing them, I'm still going to be looking for shorts. and it's not a trade recommendation. If it doesn't behave based on my plan, I just wait. I also know there's stops at the mid and the VWAP. So what can the market do? It could come back because there's buy stops in this leg. You always have to look left. Where's the fuel? The fuel are the traders, us primarily, because we're weak. Retail traders are risk adverse, which is fine, but also all trail their stops and do the same thing. So if I'm looking at locations, I'm also anticipating the squeezes because the market, as you notice, most of the time, if you get a rotation, it's going to rotate back on itself. That's what makes two-sided trade. So the idea, at least for me, is do I have a sense of who's in charge here? Well, the buyers failed. They got squeezed. Now, I should say the shorts got squeezed from the ETH. Now the longs are under the bus. So now we go down in time frame or fractal, the shorts in this leg can get squeezed. It's all the same. So then if I come outside, I'm going to be doing mean reversion. It's the same trades I've been taking all day other than the longs. Because why? The trend is down. And it doesn't mean the market won't take out the high of the day. It can do anything. So my job is not to predict. My job is to align. And that, I believe, is what trading is all about. It's alignment. If it's about prediction, I think you got your energy in the wrong place. Most retail traders come into the business, and I did. So I'll talk about me because anything you've done, I've done. I just did it earlier and much longer time ago. So I've realized that most of our motivations, and mine also early on, were to create certainty and confirmation. If that's in your head, then you're really pointing your energy, in my opinion, in the wrong place. This is not a business of confirmation and certainty. It is the 100% opposite. It is a business of 100% uncertainty, and there is no confirmation. So solving for that environment is different than spending your life looking for certainty. And because we have winning trades, everybody, and if you had nothing, if you didn't even have a chart, you'd still have winning trades. So we got to take the idea of a winning trade and the belief that we can make it better by tuning and tweaking and curve fitting. Not the way the world of trading, in my opinion, works. And it's just an opinion, but I think it's something you might want to consider anyway. So this is, remember, what's this? Too high. Now, I know I can come back and squeeze. So if I have too high, now this range, 50 to 65, it's 15 points. What do you think? Is this something you want to trade? This to this against this? You could if you have a plan for it. What do we know? Well, that is too high, and this is too high above me. If I squeeze out, I can come out here and I would sell it, right? If I don't get above here, what do I know? Too high, resistance, microstructure, support. If I get below this, target. That's all I know. Do I need to know anything else? Please give a like if you're in YouTube. Are we going to zero? Eventually, I don't know. JRB, I know you're saying you're rusty. Let me tell you, every morning I get up, I got to scrape the rust off and a little sludge. How we doing, guys? I hope you're getting something out of this. Um, this is what I share in Trader Lab. I believe anybody can learn this. I assume it's pretty different, especially if you've been trying to get indicators to solve this for you alone without an understanding of market mechanics. Why did we squeeze? And also, why was it shorts first thing in the morning? Then why did we squeeze? You need to understand not what will happen, but what might happen, and then, as they say, act accordingly. That means when the context changes, and this is all part of trade plan, it's conditions. If the condition of the market changes, you change. It's not more complicated than that. But for me, I'm integrating time frames. You know what I mean? So I don't use the clock except the RTH. Everything that's happening in here is not time based. It is behavioral and volume based. So I trade the auction, but daily or RTH sessions are time, right? It's based on the clock. This is not based on the clock. So I don't use the time. I used to use everything like you guys, you know, um, time. So logical. However, this behavior was not regulated by the clock. It was regulated by the participants. So I won't try to put the participant behavior in a straitjacket. I'm using what I see here. This buyer was absorbed. Well, how do I know that? Because the sellers got below this buyer right here. And then there's your continuation. Now, if you're very good, you understand what happened. What happened over here? Didn't the sellers take control there? Well, if I come back to it, isn't that resistance? And if the sellers are here, isn't that too high? This is all fractals. And if I come back here, now what about this? And where do you think we're going? So no, this is not a recommendation. So this is my primary target eventually, and it's not a recommendation. It never has to get there. If we break below it, I have other things to do. That might mean looking for continuation shorts. And then I don't have a lot in here. I have a lot of open space to go lower. So this could accelerate, not a recommendation. Once I get under this, wherever it is down here, 20 or 31-ish or something. Yeah, this. I hope you guys are getting something out of this. And if you are, please give a like. Encourages me to do this. There's no cost. Also, there's a link in the bottom of YouTube. If you want to learn how to do this, I'm not saying you should, but you could. Joss, I can't answer that one for you, but I think it's a matter of data subscription you might need. Why don't you just go to bookmap.com, connectivity, or just shoot off a question to support at bookmap.com. They're very responsive. Uh, there's a whole team of support. Uh, they do a great job, but it's just getting yourself set up. And also, there should be a YouTube uh, webinar on there that is getting started with Bookmap, where Bruce, our head educator, tells you everything you need to do to get set up. So take a look at that. It's floating out there in YouTube world. Okay, Joss, hope that helps you. And join the Trader Lab. You want to learn how to use Bookmap and learn it in ways that align with what you're seeing here in processes. You can learn all of this. It is somewhat component oriented. So when I talk about the Trader Lab and what we do there, it is a sequence of process. It's a conditional process that can be narrated and broken down into if this, then that. If not, then what? If such and such happens at such and some place, then what? And then is there a trigger? If there is a trigger, how do you manage your risk? How do you get risk neutral? How do you manage your trade? And where are probabilities of targets? And then what do you do? And then it's all random. Trading is not this ATM in the basement. What we're doing is we're operating in random environment because the market rotates on itself. So unless we're in a trend where everybody's running for the exit at the same time, the market, even though it's directional, which it is in higher time frames. So when you're looking at your 15 or 30 minute or 60 minute bars, or, I mean, I call them bars. We didn't have candles when I started, but let's just say whatever they are. You'll see just maybe a directional move. But there's rotations inside of all these things. Well, as day traders, we kind of need to align in these multiple fractals. I think of them as fractals. And for me, intraday time frame, if you will, is not time, right? So it's a fractal. This is a fractal. This behavior is a fractal. Where's my stops? They're up here. By the way, where did I get? Am I over here yet? Not quite. Still going for it. So if I'm sitting in the trade here, I'm always managing the trade. And if I get taken out, and let's look at this, is this okay? Trading down here, and then it's where is your trade management? Let me show you. And everybody has to kind of figure this out. There's no one way to do this. Remember where our resistance is. It's here. What else do we know? Now, I'm going to go into order flow a little bit. When we're coming down, this is sweeps. So this is a sweep of the order book. Often when we see sweeps, it suggests a counter rotation, and it works from both sides. It might. So if I'm seeing the sweeps, I know the last place my buyers got absorbed was right there. There's the buyers, and now the sellers are below the buyers. That's resistance. My buyers get above the sellers, and I have my sweep. I'm anticipating a counter rotation. Now, I don't know where it is, right? But right here is resistance, or when the buyers get above the sellers, especially this move, now this right there becomes support. So now it's where's resistance? We know this is resistance. Let's see what happens here. So, even if you just took this thing, you got a 10-point trade, with a scale, that puts pizza on the table. Now we have microstructure here, selling icebergs, buy stops going off. Microstructure is right here at the IB low. We have a trade in the Trader Lab called the IB continuation trade. It's right there. So if the trend we might suspect is down, this is a structured trade. You could learn this one. And the idea here is the short. So if you took it here or here, you'd be risk neutral. Support is there. Now, if it comes back up down to there, we have to observe it as a possible entry. And it's not a trade recommendation. All trades take stops. Let's watch it. The entry is here, or if you're waiting on retracements. Or let me just draw a little box for you here. So you can kind of see structure and where it comes from. You look to the right, you see an outside edge, a low volume node. This is the short if you're taking the structure, which is what I suggest for developing traders. One tick ahead of this, 3 ticks over there. It's about a 3-point stop in a minimum 2-lot configuration. So you're either going to take a full stop on a 2-lot, or you're going to put the trade on, get risk neutral. So you need 3-point rotation. Your stop stays there, and you're working towards this or wherever. Now that's up to you. So this is a structured trade in Trader Lab. You can learn this. It's called the IB continuation trade. It's in the 60 PDFs that I share, and they're all in the Trader Lab. This is what I'm showing you here with a structured trade, not trade recommendations. You can take these ideas and reverse engineer them. These are from like 2020. Other traders were asking me what I was doing. I was kind of posting in the general chat what was going on, So that's kind of where that came from. So I'm not a vendor. This is a collective of traders, a community. And I haven't been in a better community than this one. I haven't done much in the chat world. I did early on when they first became available, I don't know, somewhere in 2009 or 10. And I'm not in chat rooms. Kind of a distraction. But I also know what I went through as a developing trader. And it was so horrendous, I don't think anybody should go through it. Because most individuals are going to run out of time and run out of capital. So, and it doesn't mean you'll be successful if you visit TraderLab, but I think it means you're going to come away with a better understanding of this business and what it might take to develop an edge so you can have sustainability and maybe get yourself on a career path. Are you guys with me? You getting something from this? How about that like in YouTube? It's the only way I know that you guys are paying attention. Changing context. Um, hmm. Well, I use a scenario. If this, then that. If not, then what? If this, then that. If not, then what? That's my higher view of context. So I'm continually narrating. If this is too high, if this, then that. If I come back here and I get selling, then what? Then that. If I come out here and I don't get under here, which is where the buyers came in, right here, this is support. So if I'm taking a short, I'm going to be looking down here to get risk neutral. The fractal, this little micro high volume, which is sitting right in here, is the same as that high volume, except this is fractal. That's fractal. And this is a structured location. All these are in alignment. If this is too high, then that. If I retrace and I don't get stopped out, then what? Then that. If I get this and I get under here, then what? Then that. If I don't get below these buyers, then what? Then I get that. Does that make sense? Dudesman, I hope that helps you. Guys, how we doing in YouTube? If you have questions, you're in YouTube. I'll do my best. If you really want a deep dive on this, use the link in the bottom of YouTube. Come to TraderLab, say hi, roll up your sleeves, bring what you do. There's no right or wrong way to trade. What there is it's either has an edge or it doesn't. If it doesn't have an edge, it is not realistic to think you have sustainability. You'll have a great time. You'll have winning trades, but in the end, without an edge, you will not have a future in the business. And of course, you might be the exception, but you consider if casinos who only play games with an edge played games that didn't have an edge, they would keep paying the gamblers more than they take in from the gamblers. They go out of business. We're in the same business. So when we start thinking about our business, we're in a 100% random environment, just like the casinos are. So we don't know what's going to happen here. But here's what I know. I know what happened here. I know my buyers came in, and I know my sellers are here. So I have support and I have resistance. So what do I do at support? Well, subject to my plan, I might take a scale here, and then I'm looking for this. And I don't know. Notice the liquidity came in the book here. Let's see what it does. Now, liquidity doesn't necessarily mean anything other because we don't know what they're going to do. But I am conscious. I have a sell sweep, which says potentially counter rotation. I've got my sell stops coming out. Thanks for playing. By the way, what is this? This is the stop and iceberg detector. Very cool. This is buying icebergs, absorbing the sellers, and this is sell stops. And right here, we have to get under here to continue. If I can't get under this, then potential counter rotation. Now they're starting to pull, right? This is an algo. Let's see what he does or she. Got to be equal opportunity. But you see the flashing? So this might only be here. Let me give you some ideas about this. This liquidity and the absorption here might only have been to create this so the seller could take the other side, and then they pull and they open the trap door. I'm saying it might be because I can't tell you it is. But what I know is the buyers are here, right here. So they're either going to defend and absorb these guys, this, and you see icebergs. And so we have to watch this area. Why? The buyers were here. If I get below this area, I go here. If I can't get below this area, that's what happens. This is order flow, and this is how you might manage your trade. I was in this trade right here, I could punch out of it soon because I already know. Is this useful? And again, I don't know what will happen. I do know what might happen. Hope you're getting something from this, guys. Guys, should I make this public and put it out there in the YouTube world, or do you want to keep this in the Trader Lab? Remember, guys, if you're visiting in YouTube, there's a library of webinars that you can access and those PDFs. Now, the library of webinars is pretty good. Some of them are up to 5 hours long of real-time narration. I used to actually do this 4 or 5 hours a day. And, at some point you can't do that, or I can't because I'm a full-time trader. So, you know, but I was pretty motivated because I wish, I can't take you back into my experience. By the way, this suggests rotation down. That. And this, where do we come back? Resistance. By the way, I don't take this trade again. I'm pretty much a one and done at levels because I know now there's stops sitting up here. But this would be a short potentially if I didn't already take a short. But let's talk about what we know. We know there's stops now up here. So and this suggests the counter rotation. The problem with this is that might be your counter rotation. This is your resistance and your stops are now here. So I get very cautious when we come back because of the stops. And it doesn't mean we're going to get there. This could be a short. So, and I don't call trades. I'm just saying is all the pieces are here for a short. And the outcome would be random. Let's see what it does. Now, the fact I say I might not take it again doesn't mean I wouldn't take it again. It just means for developing traders, you might want to have a one and done. Because if you're building, you need to slow down and treat this like a business. You're in the business. You're not looking for action. You're looking for edge. Let's look what happened here. Let me show you. Resistance. Where'd we come? 92 stops. We never came out here. So what I kind of do when I trade fractals, I would cover. And now again, I have the sweep, I have the location, and now here's the seller. So let's assume we think it's the end of the planet and we're going to get stopped out. I come to a location, don't forget my sweep, and I get my buy stops. Thanks for playing. I have some sellers, and I get my sellers under my buyers. This is a trigger. Where does it retrace to? An entry. Where's your stop? It's still up here. Then what? Risk neutral. Where are you trying to go? Same trade. And again, I'm not saying you should take this. I'd take it, but I'm not saying anybody else should. And let me tell you why I'm somewhat comfortable with this. Because I'm trading larger rotations. Where was my last short? It was up this, right? So if I take this trade, I have enough range and I have a target. And if I take a stop, which I do all the time, it doesn't really impact me other than emotionally. I'm, have a response to it. In other words, but this is the same trade. All I'm doing, this is the rotation. This is the same trade. It's the same trade. So I'm trading, think Russian dolls. I always kind of, Matryoshka dolls, how they're inside each other. I'm trading inside of all of these fractals. That's why I call it trading in fractals, because I'm not trading time. I'm trading inside of this, looking for that. So, and the energy is below here. So I'm taking out the fuel. So this is on the hip rate and maybe down 5703, not a recommendation. It's just out there. So, short IB continuation. There it is, down to there, support, short, support, and then out the bottom. Hope you're getting something from this. You can learn this in Trader Lab if you're interested in it. I think anybody who comes to Trader Lab, and it's my belief, can learn how to trade. This is not complicated. It's really simple. Okay, we got to watch now for the rotation. There's our sweep. So now I'm anticipating a counter rotation. Let's see what it does. Very important what happens in here. This is the last short, right? 51. It's over a 20-point trade. How many of those do you need? Probably not a lot. Okay, I'm getting sweeps, so I got to be conscious here. This is my next target. This is trading the auction. This is how the market works. You can learn this. So this is the next target. Now, under here, things can get interesting again. So this trade would be over. You just take it, and your last short was here. That's 50. That's a 20-point trade. Now, we're going to watch the behavior here, and we might get continuation. I'll have to go look at the higher time frame again, but let's just keep following the yellow brick road, guys. Let me see if I can find another level for you down here. 5703-ish. This. 2503. And it doesn't have to do it now, ever, and ever. Remember where I am. This is a key level. My trade would be flat unless I get another continuation opportunity and I break away from this and from below. So very important level right here. Let's see what it does. Yes, yes. That's the developing point of control, the yellow line. Oh, which one are you talking about? The higher time frame? If this is a naked volume point of control, 5731 quarter. We just tagged it. It's our primary target for today. This is the composite volume point of control. It's the retail price for these 2 days, or the highest volume. Up here is too high, which was our outside edge for any longs looking to get short to come back here to come here. That was the plan for today. By the way, these plans are all posted in Trader Lab. You can, if you're interested, you're inclined, you all have an open invitation to visit the Trader Lab. This is what the chat looks like. There's a lot going on. Let me see if I can find some of this. It was around 6 this morning. But look at this. So this is my kind of posting. Okay. Two-sided trade, how to trade it. Levels. One of the shorts I took was full session VWAP. And it doesn't matter what I do. I notice we're rotating now off the target. Why would that happen? I'm not going to show you any more of this. You can kind of get the idea, right? And here's the library of webinars too. And there's a boatload of documents up here. This is the primer webinar. You should watch that first. It's the top. And there's everything else here. Are you a trader or a gambler? Fantasy or reality of trading? Why most traders using indicators fail? How do you win the day trading game? Waking up and trader Groundhog Day. It's one of my favorites, by the way. That was me. Work hard, curve fit, looks good. And then, like everything that's curve fitted, it breaks down. And then you retweak it and you do it again. And then you wake up in the same place in spite of the winning trades. How to trade VPOC migration. That's sort of advanced. Advanced trading processes, psychological management. And then there's document section. And then there's the best of videos starting in 2022. So there you go. That's the Trader Lab. Use the link in the bottom of YouTube. By the way, there is also a digital version of Bookmap. There's no cost for that. You can download that and kind of check it out. I think it comes with delayed data or something. I don't know. I've never used it. They didn't have it when I first started. I started with Bookmap 2015. Notice the behavior right at our target. Is that a coincidence, you ask? How about? No, it's not. It's random, but it's not a coincidence. Isn't that different? Questions? Yeah, RP. Guys, if you're in YouTube, please smash the like button. It encourages me to continue doing this. There's no cost for it. I have passion to help traders. I wish when I started, there was somebody to help me. There were no off floor traders. All my friends were floor traders. They thought I was out of my mind. The other thing is, um, technical analysis, when I started in this business, was looked down upon as voodoo. It was all fundamentals, reports. Think, Trading Places, the movie with the crop report, the orange juice report and Beaks. It was all driven by those kinds of things. Money supply, um, all fundamentals. So it really behaved differently. We didn't have algorithmic behavior. We didn't have domes. We didn't have volume. Um, we didn't have candles. It just depends where you start. We didn't have computers. We didn't have an internet. So that's how it was when I started. And technical indicators were in their infancy. So I had the opportunity as something new came into the public space, um, I would tear it apart because I wanted to see what made it tick. And initially, I thought the business was about indicators and just, kind of getting them to work together. Why wouldn't that? Because you see winning trades with them. So I spent years doing that process with everything you can imagine, plus my own. Um, and then I built trading systems, which were basically indicators on steroids, so I could optimize them. So I went down this thing, and but I always kept coming back to Trader Groundhog Day. Even when you do walk forward testing, and you're doing optimizations, you're still way behind the eight ball because you're trying to get the market to fit into the past. Well, the market is a now thing. It's happening now. And the idea is the closer you get to now, the more you can respond to conditions and behavior that is based on the current auction. And the perception of valuation or the discovery of valuation is a continuous process. So there's nothing really fixed about this. All we can look at is the most recent behaviors, which are the higher time frame down, the intermediate time frame down, and rotational, which means two-sided trade, and then the developing time frame looking at yesterday's RTH, today's ETH, which is the last auction, and then the potential. That's it. Notice that we have hit our target. So as far as, you now, there are traders in Trader Lab who will buy this with the idea coming back here. Now, for me, not so much. And it's not that it's not a viable trade. It is a viable trade if you've vetted it. So would I take this long? Maybe, but I don't call trades. And where's my stops? Here. So if I find too low, retail price, and this is the last place it was too high, and it's the initial balance, and I have an outside edge of a distribution, I can come up here and squeeze. So some traders are going to get long headed for this. Other traders are going to get in the Barca Lounger and order a pizza. Everybody can do their own thing. Hope you're getting something out of this. Please give a like if you're in YouTube. But you know, the real thing is, come to the Trader Lab. If this has done anything for you today, I hope it shows you or demonstrates at least what you might be able to do if you learn a language. This is a foreign language to you. It was to me. So order flow is showing me, and coupled with the auction, is showing me where the participants interact and also what the outcome was. If I know this, the sellers were here and resistance is here and my sellers took over, that's also resistance. What I also know is if I can get above these guys, I have a lot of stops sitting at the last swing high. There and there. So if you took this long, is it logical? You might look. Now, this is counter trend, right? So if you're taking a counter trend trade, you got to be very cautious that you're going to find these sellers again. And where might they be? Right there. Right there. That's resistance. So if you get long here, that's a scale because this is the last place. Now you had it here. So if you get long, you got to deal with this, but this is easy to me. Not a guarantee naturally because that's the last swing. And if traders have their stops here and I come under here and I can't get under this, then they're on the hit parade. These guys are on the hit parade and these guys are on the hit parade. But I have to clear all of these nodes for it to happen. So as I'm coming up, this is at least a scale down here, right there. And then I just manage the trade. Sellers are here. They were absorbed. There's the buyers. There's the buyers. There's the buyers. Sellers are here. There's the sellers. If I can get through these guys, it just lights up the stops. I trade both sides. You don't have to. But would it make sense if you were only looking for shorts? Now, we got our primary target. You know, you could be done and then just do whatever. You know? Does that make sense, guys? Please give a like if you're in YouTube. Guadaljarmo, I hope you're in the Trader Lab. Are you? If you're not, use the link in the bottom of YouTube. If you're visiting in YouTube, if you're interested in learning this, there's no cost. It is, and there's a lot of additional education, stocks, options, crypto, order flow with a high tier tool like Bookmap, options, swing trading, market maker behavior, algorithmic behavior, and a lot more. Please give a like. Use the link in the bottom of YouTube, and this stream will be available to Bookmap, Discord, Trader Lab participants to reverse engineer, etc. Observe the auction. Long to there. What do you think? If it's in your plan. Otherwise, you put the Lamborghini back in the garage, order lunch. That's all I can tell you. Thanks, guys. Thanks for visiting Trader Lab. Please give a like on the way out. Copy this link if you want to watch this again. Might not be made public. Also, there's a full library of webinars and structured trades you can access in the Trader Lab, and it's a great community. I don't believe there's anything quite like it. Traders helping traders. It doesn't matter how long you've been trading. What does matter is that you put a plan together that has an edge, and over time, build a sustainable business. Thanks again, guys. Thanks for visiting Trader Lab. Look forward to seeing you tomorrow.